Hi traders, John here. Just want to talk you through the correlation between the US 10-year bond yield and the dollar yen price. And we're going to look at the swing trading version of this as well as the day trading version. So you can use bond yields to swing trade the market as well as day trade the market. So I'm going to prove that to you guys right now. So this is a daily chart of US dollar Japanese yen, and there is a super strong correlation between the US dollar Japanese yen as well as the US 10-year yields. The reason being is because of what the US 10-year yields stand for, and they stand for essentially future inflation expectations. Now, usually when the US 10-year yield falls, the currency that is surrounding that, so the US dollar, falls with it. Okay, so the way we can kind of show you that is around January 14th, 2025, we saw the US 10-year bond yields sell off. If I go up to the dzi치티투, for instance, you'll see that around the 14th of January 2025, the market sold off. Okay, sold off pretty aggressively in line with those yields moving lower. The reason being is because if inflation expectations are lower, you know, what bond traders then look for is to buy bonds, and the more bonds that get bought up, the lower the yield. Okay, the lower the yield, that means that they're basically thinking that inflation expectations are going to be lower and that the interest rate is essentially going to be lower. Current interest rate in the US is 4.5%. Okay, now if you look at the 2 years, 2-year yields actually react a little bit quicker to the interest rate expectations and the sort of heartbeat of the market, because they're only 2-year yields, not 10-year yields. That's trading at 3.9% right now, which is basically saying that if the current interest rate from the US is 4.5%, they think that actually it should be around 3.9% if the data continues to go the way it does. So how does that give us an opportunity in the market? Well, if I go to US dollar Japanese yen, okay, and if I scroll back down to the US 10-year yields, and if I just right click on it, add US 10-year to compare, okay, and then what I'm going to do is just pin that to a new left scale, and then you're just going to hit regular on both of the axes there. So what you'll see is, or what typically happens in the market, is that the bond yields go first, okay, and then the currency follows after. You know, if I just move that to a line chart, you can see the US 10-year yields start to move lower, okay, then we start to see, so you can see it kind of peaks here around about the 14th of January and starts dipping aggressively, breaking through those lows. You can see dollar yen peaks a couple of days before, but doesn't really get going until sort of the similar time, or even a few days after, around about the 22nd of January. You can see here US 10-year bond yields start to rise, so does dollar Japanese yen as well. So if we just kind of look back at this area as well, US 10-year bond yields falling to the downside, dollar yen moving higher. But if you know that bond yields are falling, then you know that at some point dollar yen should follow through with it as well, and you get that follow through eventually. So handy little tool. Now, what I like to do from a sort of day trading point of view, so swing trading is pretty fine. One thing that I would say is I like to look at the sort of relationship between the 50 moving average as well as the relationship between the bond yields. So if US 10-year bond yields are trading above the 50 moving average, then you know you like to buy the US dollar. If they're below, I like to sell the US dollar. That's just kind of one tip that I would say have a little look at for yourselves. But another way I like to do this is using these as like an intraday filter. So what I tend to do is open up a second screen, and you can see I've got the US 10-year yields here. Now, all morning they have been falling, okay? All morning they have been falling, right? So what that tells me is that bond traders are pricing in the fact that they should get a US dollar that is lower. Now, if we just take a look at the crosshair, okay, we can see that around sort of 12:30 today, okay, we had the bond yields break out of this kind of trading range in here. Now, bearing in mind, they've been bearish all day, could be looking to sell dollar yen all morning. But you can see here, breakout at 12.30. Well, that's this candlestick here, okay, on the 15-minute chart. So if you saw that and you saw the fact that we were breaking out here, then you could look for potential pullbacks and continuations to the downside on US dollar Japanese yen, or you could wait for sort of breakout moves, you know, break of trend lines. This pullback here would have been a really nice one, especially if you went to a lower time frame, let's say the 5-minute time frame. You can see that the 5-minute here tries to form a new higher high but fails to do so. So again, nice little failure to break into a new high. That could have been a really good place to look to get short in the market, in line with this overall sentiment that is on the 15-minute US 10-year yields. Just to kind of show you that in a bit more detail, I'm just going to pop the session breaks on so you can see that it is the same day. Just go back up to a 15-minute time frame. Let's have a look at Thursday. What happened Thursday? Well, look, bond yields were bullish all morning, okay, until we got to sort of early afternoon and then into the US session where they started to fall. You can see, though, dollar yen continues to rally and moves later than the bond yields do. So that gives you an advantage. That gives you the opportunity to buy the dips throughout this area. Let's go to the day before that, Wednesday. You can see here, market sells off earlier in the session, okay? That's where we see dollar yen selling off too. But then it breaks back above that 50 moving average around about 10.15. But if we look at the same time here, you can see that price is still kind of trending lower. Once it breaks that trend, once it makes that new higher high, we get that rally in line with those bond yields. So it's a really kind of interesting sort of correlation between the US 10-year and dollar yen, and I think it can be quite a useful tool if you are looking to day trade certain assets. You know, one other asset that you could look at, let's look at euro dollar. Now, one thing I like to look at with euro dollar is the spread between the euro 10-year yields and the US 10-year yields, okay? So when I look at the spread between these two, we can see that today they have been pretty bullish, right? They've kind of broke above the 50 moving average around 12 o'clock today. And you can see, look at that, around 12 o'clock, we don't even get the breakout yet. It then breaks out once bond yields are already taken off. And that could have been a good kind of move to have a little look at. I actually sold euro dollar yesterday. I was scalping this little move in here, which was on a minute time frame. And the reason why I did that was because the 10-year, the spread between the EU 10-year and the US 10-year was down, okay? So I was looking to try and take advantage of lower highs and lower lows. So I actually scalped a little bit of a trade on a minute time frame yesterday. So if we go take a look just in here, because price, I like to think, is fractal, I like to look for those conditions where you get that change of trend situation. So the market moves higher, higher highs, higher lows, okay? What happens on this candlestick? We start to break that trend, okay? So get short in here, market trends to the downside, and because you're trading a minute time frame, don't be afraid to move your stop loss with it. And that's all I did, just trailed stops, took off 50% of the position here, and then broke through here. And this was just you doing this as an example. You know, I don't trade these lower time frames, but I just wanted to show it as an example. So I took a trade yesterday just to show you that there is a correlation between the two. So what I'm getting at is, if you are day trading, think about the bigger picture still. Think about why currency markets move. Think about inflation and interest rate expectations. And then go from there. So thanks for watching the video. I hope you found it insightful. If you did, leave it a thumbs up and subscribe to the channel.